most serious competitor, China, will confront China's economic abuses, counter its aggressive, coercive action to push back on China's attack on human rights, intellectual property, and global governance. But we are ready to work with Beijing when it's in America's interest to do so.
First coined in 2013, this strategy has now become a global reality. China Plus One is a global movement in which companies avoid investing only in China and diversify their businesses to alternative destinations. Due to its low labor and production costs, China has been receiving a sizable portion of international business over the past 30 years. However, China's zero-COVID policy disrupted the entire global supply chain, and now that tensions between US and China over Taiwan are also rising, the China Plus One policy has gained momentum. India, being the next best alternative, certainly has a lot to gain from this. One sector in particular that's going to benefit from this strategy, namely the Indian textile industry. They have been beaten down for quite some time now due to uncompetitive pricing as compared to China, Vietnam and Bangladesh. Now all of this will turn around as India gears up its production capacities along with robust government schemes that are going to help the sector stitch back its revival with China out of the picture. This week, the Midas Touch research team is eyeing a company in this sector that has a potential to be a multi-bagger over the next few years. Trident Limited is the flagship company of the Trident Group, which is a leading manufacturer of yarn, bath linen, bed linen, and wheat straw-based paper. On the fundamental side, the business achieved its highest ever sales volume in FY22 with an increase of 173% in net profit. The cash flows also turned positive this year, mainly due to increased returns from operating activity and decreasing debt. Another major metric which is very important to study for the textile sector is their cash conversion cycle, due to the dominance of credit sales in the industry. This company has seen a considerable reduction in its entire working capital cycle, which has decreased its cash conversion days by almost 30%. Typically, stocks with high promoter holdings are considered safer to invest in, as it indicates the possibility of the company doing well in the future. We can see that Trident here has a promoter holding of 72%. On the technical side, downside momentum has subsided since 21st June 2022 and volume has picked up ever since. The stock is witnessing accumulation volume and patterns in the range of 36 to 42 levels until there is a break above the 45 level on a closing basis. If that happens, the upside can be sizable in the medium term. That's all from our side this week. Don't forget to like, share and subscribe to our channel if you liked the video.